So, Wagwan. Hello, guys. Badman FX here. Yep. So, this is it. So, looking to buy, looking to buy gold. Yep. But before I buy, I wanna show you something here. So, this gold New York time now being 9:54 New York time. Yeah. Yeah. So, let's do this. Okay. So, on a daily time frame, I want to show you something. Okay, so on a daily time frame, as you can see, market created it inverted this fair value gap here. It was fully inverted on Tuesday, 6th January this year, 2026, and after inverting it, as you can see, the market came down and filled it. But when inverting this gap, it left behind a fair value gap. So as you can see also the market came and filled the fair value gap. I've used Fibonacci, DRT, to measure the fair value gap. So don't mind me. So this is how I use this. So this is my upper quadrant. The middle point, the red one, is the equilibrium, and then the blue one is the lower quadrant. So as you can see, the market came down into the lower quadrant and then pushed higher. That shows a rejection. Yeah, that shows a rejection. Yep. So the most effective parts are the upper quadrant, the equilibrium, and the lower quadrant. Okay. So if we go down to 1 hour time frame, right, right. If we go down to 1 hour time frame, you can see market is bullish. It was ranging here and then pumped higher. So we're having this hanging fruit here. This liquidity at 4,500, 4,500. Yeah, and also we're having all-time high. So that my target is all-time high. I'm targeting to aim all-time high. So as you can see, we go down to 15 minutes time frame. What do you see? What do you see? What do you see? On the 15 minutes time frame. 15 minutes time frame, we are having this fair value gap here, in which the market has not yet filled it. As you can see, it has tried, but it has not yet filled the fair value gap, and that's an issue. Yep, it's an issue. Okay, so let's go to 1 minute time frame where we were. If you go down to 1 minute time frame, so I took this trade, these two trades here. So this I missed this trade here. Let me first show you that. Let me first show you that. I mean, oh my god, I can't believe this. So this is the trade that I took today morning. So it took my break even. Yeah, I expected it to take this low. So this buy. So this buy, I was expecting the market to come back to this 15 minutes fair value gap, in which it did not come. If you go to 15-minute time frame, I'll show you better. Mm, this is amazing trade. So this 15 minute fair value gap, can you see it? The market did not get there. Look at this. It came and smelled the fair value gap and then pumped higher. So I did not take it. So I always wait until the market tap to my point of interest and then I execute. But that time it did not. So let's go to one. So okay. So 9:30 was here. For 9:30, our first presented fair value gap visit. So we mark it and we extend it. So as you can see, the market came down and then pumped up. So this is we name it as a reclaimed first presented fair value gap. First presented reclaimed fair value gap. Yeah, because it is reclaimed once and twice. So I might be expecting it because we are having a break, a market structure shift here. This is a swing high, so we are having a market structure shift there. So I'm expecting it, but this is a risky trade because I don't know. We're having gaps down here that are not filled yet. But let's see. I'm gonna risk a buy if the market will come back down here. Targeting that turn. But if it will not, placing my stop loss right below there, targeting this high and more. So let's see. Stay tuned. Meanwhile, I also took a trade on Euro USD. Yeah, I'm still holding it. Let me show you that. So if you go to 15 minutes time frame, I'll show you better. So this is it. 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 I'm still holding it. I took this trade yesterday at 11:00. It was New York time. That's around what time was it? 7 8. I don't know. Yeah, but it was evening time to our local time. So yeah, I wanna break this down now. I wanna break this down. So let's go to daily time frame. So on Euro USD, I am totally bearish. I'm bearish on Euro USD. I'm very, very bearish on Euro USD. Why am I bearish? So first of all, we're having this daily fair value gap in which it's about to be inverted. This candle is going to invert it. So possibly I might look for the market might come back to test this inverted fair value gap, in which after that I'll be looking to add more positions there. But I don't know. It might come back and take my break even. So we are also having this liquidity down here. This liquidity, sell side liquidity. We are having it there. So that's an hanging fruit too. So I'm totally bearish. So this trade I took it yesterday. So yesterday the price of yesterday was here. Where did I take it? Let me go down to 1 hour. We go down to 1 hour. 1 hour time frame. On 1 hour time frame, I wanna show you something. So on 1 hour time frame, we had this break here, and the market left a favorable gap here. Left this favorable gap here, and this favorable gap, we are also having. This is the equilibrium. What did I tell you? This is a Fibonacci. How do I use it? So I have the upper quadrant, the equilibrium, and the lower quadrant. So these are the favorable gap that's about to be inverted. So this is how the market was reacting on it. So as you can see, it came and tapped the equilibrium, then pushed higher and failed to remove this high. That's a failure. And then it came down and broke this low break of structure and left behind this fair value gap. As you can see, this fair value gap is aligning with the equilibrium. So as you can see, look at this. This is amazing. Look at how the market filled that fair value gap and rejected the equilibrium uh, and pushed the price lower. So going down to 15 minutes time frame. Going down to 15 minutes time frame. Going down to 15-minute time frame. As you can see, we also had this. We also had this 15-minute fair gap after the break of structure. So they are aligning the 1 hour fair gap plus the 15 minutes fair gap. So they are really aligning, and it was after the break of structure here. All right, and a failure swing. Plus, we are having, so if you're having a failure swing, what do we call this? This is a mitigation block. Yeah, mitigation block, breaker block, and mitigation block. So this the mitigation block. Yeah. So the mitigation block, this one. I think it's this candle, this green candle, if I'm not wrong. Yeah. Or you can just mark the entire place. Yeah, you can also mark the entire place. Yeah. But I prefer marking the body. So mark the lower part of this candle. Yeah. Sorry guys. Let me use this. Yeah. Look at that. Let me change the color. Let me put it yellow. Yeah. Yep. Look at that. Look at that. Look at that. Let me zoom it so that you can see. Look at how the market did there. Look at let me there. Look at this. Look at that rejection. That's amazing. So going to 5 minutes time frame. I'm going until where at the time frame that I actually executed the trade. I'll just break it down from the higher time frame to the lower time frame. Yeah, the top down analysis they call it. Okay, okay, okay. What's happening? Oh my god, my Wi-Fi. Wi-Fi, 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 Wi-Fi. What's happening? Hmm. What's this? What's this? What's this? Oh my god. That's actually bad. That's actually bad.